Hey guys, hope you are all having a fantastic day. Over the last months, and even last couple of years if we are being honest, we have seen a significant amount of damage be done to the middle and lower class. Stocks and crypto went to the moon during the early stages of the pandemic, but the only winners there were big corporations who used taxpayer funds to buy back all the stock, send it to the moon, and then cry wolf to Congress for some more loans. Recessions are a funny thing in economics. They are generally perceived as negative, widespread and prolonged downturn in economic activity. You see CEOs on the news crying, you see captivating images of people getting foreclosed, angry citizens become more polarized in the political opinions, demanding justice for the poor leadership of elected politicians. These events become historical chapters that in years, will be studied by your children in a history class and will be tested on in economic classes in college for the lessons to be derived. However, recessions are so much more than what they make them out to be. You see, it takes a keen perceptive observation to really derive what the effects of recession are, and after the research I am about to share with you, I am pretty sure you too will be convinced that recessions are nothing but a mechanism for corporations to make profits long term. By inflicting pains in large proportions in short time frames, corporations, with the help of the Fed and their lovely slaves in Congress, corporate America makes an absolute killing, both in the short, but even more so in the long term. To put it plainly, recessions, at least in the more modern times, are actually orchestrated events that are driven to existence by unrelenting corporate greed that understand they can use the Fed's slow ability to adapt to collect as much profit as possible, crash a market and then use said profits to further drive out weaker competition, centralizing market dominance to their own benefit. A recession is perceived by the uneducated as times where the economy is weak and money is short. However, when taken from another angle, the one of the victor, markets are short time periods where everything goes on a Black Friday sale, adept to be easily acquired or merged with. It's a pivotal point where only the most ruthless of businesses will really thrive, setting themselves up for success for years to come until the next recession comes up, so that the cycle can start again. But I know this is a lot to take in, and I promise to pace it a lot better, but before we get started I want cordially invite you guys over to my Discord. If you are interested in day trading alerts, or are having problems with your own trades, head over to my Discord and I will help set you up for success. So far, last 2 months have been very good according to our members, and there's open spots, so use the link in the video description and come on over. With that said, let's dive right in. Over the past couple of months, the current administration has been boasting about a strong and thriving economy, and though I disagree with their overall impression on the health of America's economic power, I will give credit where it's due. Unemployment is indeed very low, corporate profits are up and high, hourly wages are up as well. Even with high sticky inflation, the CPI numbers have been decreasing over the course of the last 6 months. Yet, even with these stats, the general consensus is that America is set to get into a really deep recession. Consumer sentiment is at a low, even Biden's approval numbers are among the worst for a first-time president historically speaking. Polls consistently show Americans are struggling to put food on the table, young adults' credit card usage are high while savings are low. When citizens are asked about the economic outlook for the country, the overwhelming majority express concern, uncertainty and overall pessimistic views. So in a way, we have a tale of two cities. We have current administration officials saying things are better than ever, and then you have everyone else saying everything is worse than ever and have decreasing confidence in the government to improve things. The United States is a relatively new country, it's almost like a new idea of sorts. After the first half of the 20th century, the United States had come out of 2 great world wars and the Great Depression. The country was bound to finally start growing and becoming the resounding economic power it is today. However, something began to happen in the late 1970s. Economic policy of the times began a trend that has strengthened all the while to today. Economic inequality began to rise steadily. Recessions, in those times before the 21st century started, actually did hurt the rich, since most of the wealth resided in financial markets. But then, something different began to happen, something that hadn't been studied by economists. Whenever the recession passed and the period of recovery began with growth in all sectors, so did income inequality as well. Jumping back from the 1970s into 2020, when the recession began months after the onset of the pandemic, an onset of labor shortage started. The current government quickly shifted to remedy this problem, and now we sit at the lowest unemployment numbers in history. And yet, with this presumed to be resounding success, economic equality has worsened in historic numbers as well. Low-income workers, who were the most affected after the lockdowns, drove unemployment numbers to peak at 14.7%. Meanwhile, the S&P 500 went straight to the moon, and continued rising through the end of 2021, enriching the wealthiest in amounts of trillions of dollars for those on the top 10%. This was the most unequal type of recession in history. Some research has been done to study this new phenomenon, and the results are quite interesting. The results of such research suggests that once the recession is over and income inequality resumes growing along with economic growth, inequality will grow at a faster rate than before merely just because the recession occurred. That's right, the recession that is ongoing right now will have a redistribution of wealth much bigger than that which we saw in 2020, in 2008 and any other previous historical moment in known history. You are about to watch a new chapter of history unfold before your very eyes that will leave you bewildered. This latest study, funny enough, came from the Bank of International Settlements, a financial institution based in Switzerland that's owned by 63 central banks, including the US Federal Reserve. The bank looked at 40 recessions in 12 advanced countries, including Australia, Canada, France, Germany, Italy, Japan, Norway, Spain, Sweden, Switzerland, the United Kingdom and of course, the United States. The study compared income inequality growth 5 years after the start of different recent recessions to income inequality growth during other time periods of comparable length. It found that income inequality, on average, grew twice as fast during periods associated with recession, to the surprise of all the poor and the grin of the rich. The results are more shocking than this, however. You see, a big and important finding in the study was that inequality rose quickly during the recessions, especially the one we are in. But while reviewing previous ones, it found that the income inequality continued rising quickly even after the recession period. That recession which we saw in 2008 saw income inequality growing at a very alarming rate all the way through 2013. The conclusion to the study was that recessions provide monetary respite from growth in income inequality have the net effect of making said inequality grow at least twice as fast as before. That is at the very least, meaning that the average growth of said inequality is dangerously higher than that. Recessions, simply put, generate income inequality, or in other words, make the rich much richer than you think. Imagine your income and entire net worth more than doubling after a recession of a couple of years. You would be ecstatic to find out everything you owned was at least twice the value. The reason for this, for those more mathematically curious, is because the stock market recovers even as unemployment remains stuck and mortgage delinquencies rise. Capital falls much faster during the onset of a recession, but also rebounds much faster after them than people do. For context, from 2008 to 2013, the stock market had fully recovered, meaning it took them 5 years to get back to where they left off. Coincidentally, the effects of Americans of the recession lasted more than a decade, and can still be argued to actually exist in tiny parts of the economy. Looking through the study, some details quickly arose that make the situation worse. In those 12 advanced economies I mentioned earlier, ours included, income taxes have become less progressive since the 2000s. Unemployment insurance has also, shockingly to no one, become increasingly less generous, making it much harder for these advanced economists to spend their way out of economic downturns. The way wealth is redistributed in these countries is backwards. A separate study went on to study pre-taxed income inequalities, and I will be speaking regarding the segment and results of America. The study found that pre-tax income reduced budget deficits by distributing income upward to the people who pay the highest marginal tax rates. When the rich class have more wealth, they tend to pay more in taxes, driving fiscal revenue to go up. But the favorable effects of this are non-existent to the average Joes like me and you. What this economic function does is make the middle and poorer class poorer, which in turn has the larger effect of slowing down economic growth overall in enough proportion to enlarge deficits. This deficit bloating effect of the demand constraints we talked about just as large as the deficit shrinking effect of the rich class paying more in taxes, consequently with the study concluding that according to their findings, income inequality's net effect increases deficits. In simpler words for the average Joe, the whole idea of trickle-down economics does not work. Big shout out to Timothy Noah from the Soapbox for his contribution in uncovering all these things. A question being asked by most people, who are both economically affected by the current conditions of the world and uncertain about what is to come, is what awaits us. I cannot with any certainty paint a picture of what the individual or even macroeconomic picture of the future will look like, but I do have plenty of clues given the wide array of data that is consistent with one another. A recession is here, or as the corporate media says, it's not here yet but could come. Regardless of which of these two opinions you abide by, one thing will remain true this time around, and that is that the recession is or will be here for most, but not for the few. Americans are going to be hurting big time from what could be an economic event that could take decades to fix, but there's a small and rich number of individuals that not only will survive it, but thrive in it, and you will be eyewitness to it. The thing that will make this event different from the previous ones is the extremity of it. Income inequality won't simply just get worse, it will get extremely worse for a significant number of individuals. The rich won't get richer, but rather they will get extremely richer than any other time in history. We will see people become trillionaires in a couple of years, because their ability to recover and centralize more wealth into their own pockets as a result of the current economic conditions will be greatly enhanced by organizations like the Fed, and poor regulation by the American Congress and current administration, who continually and purposely fail to do their duty to protect and preserve the best interests of their constituents. It's still too early to tell, but depending on the impact this could have on real estate, we could see a huge expansion of corporate-owned housing in the near future. Already, about 1 in 10 houses is being bought or already owned by a corporation, and this number is going to increase dramatically over the next few years, and especially so if a recession of enough magnitude occurs where people are forced into foreclosure. We have gone over dozens of evidence, from statements to business reports, showing that Wall Street wants to greatly expand their ownership in real estate and nothing is going to stop them, especially when they are the ones financially backing the politicians to implement policies to constrict housing development so that they can artificially manipulating the pricing of the current housing market. This is the pivotal point where we begin to see the famous phrase of "you will own nothing and be happy" become a fully implement cycle in America. If you are middle or lower class, your children's ability to own a home will be greatly reduced, and their own children's probability even more so, and so on and on. We already don't own the music we listen to, the movies we watch, the games we play, and soon, the cars we use for transport. Already, the idea of relying on self-driving cars while paying monthly fees is becoming a much more appealing idea. The only thing you will own are the overpriced brand t-shirt and glasses you bought to presume to others you are in a higher class than you really are. Everything else will be a service rented out to you, and with the Fed and government planning on implementing a digital currency to force down on everyone, you better believe there will be a system eventually implemented that, indirectly, rewards and punishes behaviors. I am not one that falls for weird conspiracies, or one easily prone to believe the government is all bad and everyone is out to get you, but the proof is in the pudding. The numbers don't lie, the future is laid out in a blurry canvas but clear enough to see the dystopia we are set for. Thank you for watching my video through its end. I did not intend to make it sound so grim, but it was hard not to when the concluding facts all paint a shady picture. Still, I remain hopeful for a better future, and maybe I can make yours a little brighter. Come over to my Discord, come day trade with us and make some passive income with an engaging and bright group. I hope you have an amazing rest of your day and to the moon.